Hello everyone. So as you know, we were short overnight. Nice, simple, safe trade. We went short at 450, slapped the market down to 448. Nice and simple. Sold the puts for 16%. What are you going to do? Nice and simple. So in today's video, we're going to take a look at what the next steps are for the market. Trading, all it is a numbers game. We're just going to continue taking high quality trade setups. We saw that there were many reasons to go short yesterday. Now today, we're going to reassess the market and take it one day at a time. All right, so we're going to take a look at the SP500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, the yields, all that good stuff. And of course, the large tech stocks, because you have to look at these trillion-dollar equities. So without further ado, let's get started with the video. All right, guys, so first and foremost, we saw that this entire week had a lot of IWM-related names that were going to have earnings. So we know that into earnings, there is an earnings run up where the stocks end up doing well prior to earnings being released. So we had Target did pretty well. Home Depot did pretty well. But then today we had Walmart and Alibaba report earnings, and they got absolutely decimated. And because of Walmart, Costco also got decimated. So this is a daily chart of Walmart. Shiver me timbers. Went Walmart down in the bunker. Absolutely got decimated. Costco also did not do well. So Costco and Walmart got hit hard, and these companies hold a lot of weight in this sector. So when Walmart's not doing well, it's not really a good sign for the other companies. So that's why Costco followed as well. Now we can take a look at Baba. Baba also got slapped, and that is not good overall. So that really helped pull the IWM down, and that is a big reason why you could see that the IWM was the biggest loser out of the three main indices today. It's down 1.6% as opposed to the NASDAQ and the SPY, which are slightly green. So now the question is, what happens next? Okay, so let's go ahead and first take a look at the dollar. So when looking at the dollar, it's important to realize that we have an inverse relationship to the market on the dollar. So if the dollar is doing well, then that is generally bearish for the market. And this current setup, we are bottoming out really well. This setup tends to bounce to the 38.2% fib right here. And if we end up bouncing to the 38.2% fib, that is generally bearish for the market. And especially since we got these two solid green candles, right? We had a huge intraday fluctuation in the dollar, but this is still pointing towards a bit of an upside move. The dollar currently still looks bearish, okay? Next, let's take a look at the VIX. So the VIX, we know, is also important because it has an inverse relationship similar to the dollar. If the VIX is about to do well, then that is bearish for the overall market. And currently, the VIX is holding this psychological $14 level. The VIX above $14 here is obviously, it's bullish for the VIX, which is bearish for the market. So now when just looking at this setup, what happened here? This made a new low. We wicked below prior lows and painted a green candle. Now, generally when that happens, there is another move to the upside on the VIX, which is bearish for the overall market. So the VIX looks bullish. The dollar also looks bullish. Okay. Next, we have to take a look at the yields. So the yields do not look as bullish. So the yields have some explaining to do, because they can easily fall down lower as well, and they could hold this level of support. So it's kind of catch-22. We're at a level of support. You go short on the yields, etc., etc. What do you do? My main level that I'm looking at for support on the yields is this downtrend level, to see if we can hold and continue on up. But as we get closer and closer, it becomes more dangerous to be bearish on the yields. And essentially, just looking at this setup, it doesn't look the best, but unfortunately, we are at a level of support. And the yields are important to look at as well, because they have an inverse relationship to the market, similar to the dollar and the VIX. So if the yields go up, then that is also bearish for the market. And the yields aren't necessarily giving as clear of a signal. So this is the 10-year yield. Let's take a look at the 20-year yield. Same concept, does not really look too promising. Once again, we're holding a level of support, but this is clearly a bit of a bearish setup, right? And let's take a look at the 30-year. Same concept. So, you know, it's not screaming bullish and it's not screaming bearish. So either way, the yields aren't giving as clean of a justification to be bullish or bearish. So there's that for the dollar, the yields, and the bond, or the dollar, the yields, and the VIX. The VIX looks bullish, and the dollar looks bullish. Given those two look bullish, that is generally bearish for the overall market. So, you know, to be fair, that's about that, right? Now, let's go ahead and take a look at the large tech stocks. First up, let's go ahead and take a look at Apple. Apple, we filled this gap here from back in August 3rd with a low. Basically, the gap was at 190.69. We filled that gap today. But then what's interesting is that we wicked above a level of resistance and we could not hold above that level. But this is really, really strong out of Apple. But, you know, regardless, you can't really be bullish up here. Any sort of calls that you do get overall on the market, you have to get them out for at least a month and a half. Give yourself some time, because in the short term, you know, this is just not really sustainable. So regardless, Apple is plowing through resistance. Microsoft, also, this is just ridiculous. ridiculous move on Microsoft. It just is just continuing to go up. And according to the MACD indicator, it's not even looking to cross above on the MACD, which is very, very bullish as well. And it's tough to buy into this strength. But, you know, it is what it is. This is just a lot of strength on Microsoft. Amazon. So Amazon took a bit of a hit, primarily due to Walmart and Costco. And of course, you know, as well as the IWM. So I've been telling you guys how Amazon is also affected not only just by the NASDAQ, but also by the IWM. And you can see that Amazon failed to close above this major level of resistance that we've been monitoring at 143.63. So currently, Amazon is showing a level of restraint compared to its tech stock brothers. So this is not, you know, if this does fall lower, the 144.50, the 145 level would be the area where you would want to go short for another move to the downside. Now, Tesla is moving a bit normal. So Tesla was opened and closed outside of the upper bands. Today we had a big move to the downside, also in part due to the IWM. And essentially, you know, we had a down move on Tesla. We could continue falling lower into this gap here at 225.50, but the 230 level is the first important level of support. From there, we need to really need to have a strong move and break back above 238, in my opinion. If we break back above 238, then it'll give some more room and more follow through to the upside. But until that, until we get a nice solid close above 238, or if we get closer to 225, those are the two instances where I would rather be bullish on Tesla. Okay. Google did really well also. So yeah, Google and Microsoft did really, really well. Let's go ahead and take a look at the chips. And of course, the chips also bounced really heavily, but you know, it's very close to that $500 psychological level. You could see that Nvidia is going up on price, even though the MACD is falling lower, which shows a lot of aggressive buying on the MACD here. And of course, let's take a look at AMD. AMD also very, very strong. The MACD looks like it's about to cross lower, but price is moving up. So overall, equities are extremely, extremely bullish. Now, what's interesting though, first off, let's go ahead and take a look at the IWM. The IWM is not so ideally, right? Ideally, I would like a bit lower before going long on the IWM. Obviously, the IWM, there's a lot of sector rotation. We're rotating out of, basically, we rotated into all of these stocks that had earnings, essentially, and they were going to be consumers. And I would rather wait to drop this a bit lower first, because we could see that we closed below this trend line, and I want to see how it responds around this trend line first. I would much rather it see it open lower heading into tomorrow. But now the issue is that the IWM has been the biggest winner, so the IWM is going to have the most buyers. So the other thing that I want to show you guys, this is a chart of the historical call volume in the IWM, and it hit well beyond an all-time high, which is also bearish. So because of this, and because of bad earnings from Walmart and other stocks, I really don't want to buy the dip just yet on IWM. I want it to fall a bit lower first, because something like this, whenever we get huge spikes in call volume, it is generally a very bearish signal. So because it's a bearish signal, I'm not expecting just one red move on the IWM. I want it to get it a little lower, you know, so get a nice little price lower. So, you know, of course, hopefully that will be the case. It'll give it some time to cool off, hopefully around 174, 173 area. That would be an amazing opportunity to buy a dip. But this, blindly buying this dip over here, is not the best trade to make, in my opinion. And if it does work to the upside, it is what it is. We missed our long opportunity on the IWM. So unfortunately, when we're looking at the IWM on a 4-hour time frame, it does look like it can rip above. Unfortunately, right? The falling wedges are generally bullish patterns. And when you take a look at this on the 1-hour time frame as well, it shows a bit clearer. This is a falling wedge, and falling wedges are bullish patterns. So, you know, if we do miss this break, it is what it is. But I would have rathered it break a bit lower to 173, 174 area for a rip higher before we go long. So this is the performance of my bot for the day. The entire move up early in the morning, we completely caught that with multiple buy indicators. And then had you had gone long over here, you would have been profitable the next minute. So this is a 1-minute chart, obviously. So this is a scalping bot. We went short. You would have caught this entire move down. And then, you know, we got a bit of a fake out over here. But had you gone long over here and here, you would have made profit on that. Then we got a short signal here. We got another short signal here. You would have captured this entire move to the downside. And then, you know, even going short over here, you would have caught the next minute falling lower. You know, then it basically just gives multiple buy and sell indicators throughout the day. And basically, once the market bottomed out closer to 448, it was nothing but upside. And we really caught this entire move to the upside perfectly. Even this enormous, monstrous move to the upside. And then we caught the monstrous sell to the downside. And basically, it's been performing really well. It honestly performs better than any of these indicators on the market. So if you guys are interested in this, go into the comment section below. In the link, you have to open the link on your web browser. Not in the YouTube app. You have to open my channel on the web browser and you click join. In that join, you're going to get access to Discord. You're going to get access to one-on-one coaching with me. You're also going to get access to live stream trading and this trading view bot. So if you guys are interested in that, once again, go into the comment section below and click join and open that link in a web browser. So once again, this is a chart of the NASDAQ. It's not looking spectacular. It doesn't look great. The IWM got the most call value in history. The NASDAQ is painted a red candle like this. Nvidia couldn't break above its high. A lot of these setups are not extremely good opportunities to go long. If you're looking to be bullish over here, like aggressively, then there's something off with your trading strategy. It doesn't really make sense. So If you caught the bottoms, that's a different story. But in general, the way that this is looking, it doesn't look great. So even if we were to bounce overnight, it is what it is, because the dollar and the VIX both look bullish. And as you know, the dollar and the VIX, if they look bullish, then that is bad for the overall market. So, you know, this is not really a good way for us to break out higher. If we do make another leg up, then that is just crazy, to be honest. But there is more room to the upside. Microsoft is skyrocketing. If Tesla gets to act together, Tesla can help pull the market up as well. So yeah, you know, it's regardless of what you're doing up here, you have to be safe, and you can't over allocate, and you cannot be aggressive with your expiration dates. That's the most important thing. But NASDAQ doesn't look too good. Okay, let's go ahead and take a look at the SPY. So the SPY, similar situation to the NASDAQ, doesn't look too good. We couldn't even come and retest yesterday's high. This was not really the bullish move that bulls wanted. But to be completely fair, we remained above 450. As we remain above 450, that still is a launching pad for a move to the upside. What bears need is for this to break and close below 448. If the SPY can close below 448, we can easily drop to 445, and at 445, that would be a much better buying opportunity. 444, 445 would be much better. But all eyes are on these two levels, the 448 and the 450. If 448 and 450 continues to hold, then the next upside targets are 452 and 453. And that would coincide with a bounce with the IWM, and that would coincide with another move to the upside with the NASDAQ. So it's looking pretty interesting right now with the market as a whole. We are holding. The pullbacks have been very shallow. They haven't been very aggressive to the downside, even though risk reward is in favor of bears. Risk reward 100%, in my opinion, and according to price action, is in favor of bears. For you to say otherwise, you are having a bias attack. You need to stop having a bias attack, slap yourself in the face, and just realize, in terms of price action, if we continue skyrocketing up, that doesn't mean that it's a good high risk reward trade. Especially going long newly over here with a short-term expiration date. What I do want to do is, if we fall down to 448, even below, I just want it to break below 448. Get it to 447. Get some sort of a pullback. I will buy calls. I will 95%. I will buy calls. Expiring, I want to give it some time. So I'll buy it for a month out, because I know regarding seasonality, the end of November is bullish. And my thesis is we will chop around. We might fade lower a bit heading into next week. But then into Thanksgiving, we're going to go higher again. So I really just want a bit lower. But, you know, there's no stopping institutional buyers at the end of the day. But that's basically my thought process. That's my thought process on the entire market as a whole. The dollar and the VIX look bullish. Generally, that's bearish for the market. So we're just going to have to see how that plays out. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.